Welcome, guys, to another episode of Buy and Hold. I'm your host, Thick Teddy, and I want to say thank you guys for being here today. Drop a like on the video, comment what stock you want to see me talk about next, and subscribe to the channel. I got my thick shirt on. These are bomb, and I also just got over influenza. So if I cough or sneeze or stumble over my words or anything, you guys know what's up. But this video here is about Palantir. Or PLTR. It's a company that came public, I believe, in 2020, sorry. End of 2020, PLTR came public, and it was quite the craze. This thing had lots of investors hopping in it at $10, if you guys can see right here. I think I even traded it a few times myself. Ran all the way up to $45, and we are back at $6 current day. So this is either the opportunity of a lifetime, or we're seeing the fall of a company, and we're going to talk about which one it is today. But first, we need to get a good view of what is this company? Like, what are we talking about here? So let's head over to this business model outline. So we start off here. It says this company's tech helped locate Osama bin Laden in 2011 and is being used to trace COVID-19 infections, track medical supply chains, and even predict outbreaks in pandemic hot zones. Think of the company as a search engine for deep analysis of petabytes or millions of gigabytes of data. That last sentence is very, very crucial for figuring out what PLTR does. I remember during the pandemic, there was a lot of news that came out of them helping hospitals find PPE when they couldn't find it anywhere. So think of it as kind of that way, and also use that last sentence there. This is a great look at what PLTR does. That's a great kind of summary. Let's get a little deeper into their business model here. So Palantir is split up into three main products: Gotham, Foundry, and Apollo. Gotham is used by counterterrorism analysts in the United States intelligence community and the United States Department of Defense. Foundry is used by commercial clients like Merck, Airbus, and Fiat Chrysler, while Apollo is a system that manages and deploys both Gotham and Foundry from a software standpoint. Palantir's business model has three phases: acquire, expand, and scale. If you guys need to pause this video to read it at any time, go ahead. In the acquire phase, the company offers initial implementation at little or no cost to the new customer, and the customer is considered to remain in this phase if its revenue is less than $100,000 in the respective year. In the next stage, expand, Palantir continues to further expand the implementation, pinpointing specific pain points and challenges. This phase is entered once revenue from the customer exceeds $100,000. The customer enters the scale phase once everything is implemented and configured, and the client adds their own software to sit atop Palantir's platform. So that should give you guys a quick just overview of what this company does and kind of its business plan, because that's a pretty clear outline of what does this company do and how do they do it. Sorry, my cat is wanting to be a part of the video. Say hi, buddy. There's my flame point guy. Let's move to the chart now. This if you need to pause again for the second time, if you need to pause and read this, or if you need to go to this website, it is just search "How does Palantir make money" on Google, and it'll probably be the first one. It's mywallstreet.com. So yeah, there's that. Let's move to the chart here. So you guys can see that late in 2020, but early in Palantir's publicly traded life, it was sitting at this $10. Kind of just leveled that a lot of NAV SPAC sort of stuff live at, and then, boom, $45 super quick. And then we saw, back in 2021, early 2021, we saw this start to just consolidate, and then it have its run from, 17 something all the way to 28, and then drop back down, consolidate 20 to 28, and then it finally reversed fully at the end of 2021, about a year after it had gone public. And we saw it top at about $27, and there has not been a clean break of the 20 MA since then. And that's that's pretty concerning for this company from a technical perspective. And we're also at all-time low right now. We're going to have to cut off that top chart just so we can get a better look at this recent chart here, but we're at all-time low. This was previous all-time low on this wick on May 22nd, but we're at all-time low today as I make this video. We just came off of a reject of the 20 again, and another small reject of the 20. So now it's time for us to determine, is this an all-time low investment opportunity? Is this a tech company that has real potential going into the future? Is this something that is a moneymaker in the IRAs going forward? Because right now this is looking really, really bad chart-wise. It's not looking like there's any support below where we're sitting. So if it breaks this, if it continues into this all-time low area, like if we just keep cruising down for a few days, there's going to be no support there, and we're not going to have any idea what's going on. So as of technical buy zones for me, there are none right now. It's all down to basically key psych levels. So, maybe $5 would be, a very, very key psych level. $6 would be a very, very key psych level. Any dollar level at this point is basically a massive level for PLTR because there's nothing else to look at here. There's absolutely nothing else to look at. You might be able to, I don't even think I can call this technical analysis. I can't even call that technical analysis. That's just drawing. I'm forcing a line on my chart there. There's nothing to do here. You just need to determine if it's a value play at all-time low or not. Because essentially you could scale in at every dollar. You could start at 6 and then add at 5, add at 4, add at 3. Or you could add every 50 cents if you think this thing rebounds faster than normal. You could add right now and then add at 6 and then 5.50 and then 5 if you think that 5 is the bounce zone. But regardless, let's move on to a bit more of a fundamental analysis of this. All right, so here we got the FinViz. I'll let you guys look over it for a second. I actually just need a drink of water. My throat hurts. All right, so we've got a market cap of 14.5 billion, an income of negative 560 million. That's a big point. We're going to talk about sales. 1.8 billion, book per share $1.15, cash per share $1.17. A great debt. What's the word I'm looking for? I'll just say debt to equity ratio, I guess. I was looking for a good debt profile. That's what I was going to say. This is a great debt profile. They could pay debt off easily. They don't have any debt, so they have some nice money sitting around to do whatever they want to do with. Their forward PE, Their PS, not very good. Their margins, not good. Their EPS, though, is pretty good. I'll give them that. That EPS is pretty nice. I like that. The investor transactions, institutions are adding. Insiders dropped, but they only held 6.6%, so it's really not that. It's not that substantial. It was a big move in the insiders, minus 22%, but also it's 0.6%, so it's really not that big of a deal. But the institutions are adding, which is a solid move. We're gonna need them to add more though. If I feel comfortable feeling like this is a great, like institutions are in it, we need to get in it. 34% is not that heavy. Analyst price target on average is 9.4. So, we're sitting pretty far below that analyst price target. The biggest issue with this fundamentals for me is just the valuation that we're seeing here. The valuation is just kind of crazy high. 14.5 billion for a company that doesn't have any profit is tough. That's not what we like to see. But they do offer a lot of government contracts and a lot of very, very high value contracts that they have. You saw the names. They were helping the government find Osama bin Laden. They're with Merck. They're with like big companies like that. So that's kind of where it's starting to feel a little bit like, damn, this is like a great company. It's just a little bit overpriced, and the price on the stock, so the $6 price tag makes it feel like it's a cheap stock, but then you look at the market cap and it is not a cheap stock. So we look through this. The debt to equity ratio is really good. The institutional ownership and transaction is okay. The EPS was pretty good. All that kind of stuff, not bad, but just it's the income and the market cap that are the issue. Those are the detriment to this. All right, so let's look at their last earnings report. I feel like this is always something really good to look at when you're looking at investing into a company. So it says right here, we beat expectations for revenue growth this quarter and expect to have a strong finish to the year, even in the face of the continued strength of the US dollar, said Alexander Karp, who is the CEO and the co-founder. The other co-founder is Peter Thiel. I don't remember his exact name, but it's something like that. And he was also a co-founder of PayPal, I believe. So quarter three highlights, we have revenue grew 22% year over year. That's pretty damn good. U.S. revenue grew 31% year over year. Pretty solid. U.S. government revenue grew 23% year over year. So they're getting a lot of contracts from the government. And they're getting them, and they're kind of like, they don't talk a lot about them because of the nature of them, obviously. But they do a lot of work with the U.S. government. And I don't like to bet against stocks that do, or companies that do work with the U.S. government, because the U.S. government has been known to substantially help out those companies that they have a track record with. So that's going to come into play when I talk, about a little bit later. I have their company saying something about the market recession and companies dying and stuff like that. That's going to come into play when I talk about that. You can see customer count grew 66% year over year and 11% quarter over quarter. That might be the biggest thing on here. That right there might be the biggest thing on here. Just let that one sink in for a second. Think about how much that is. That's pretty insane. That's pretty insane. So their margins are also getting better, which you guys can see right here. Margin, blah, 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 blah. You can read this right here. And let's look at this. U.S. revenue of $1.1 billion on a trailing 12-month basis, representing a 38% growth year over year. That's pretty good too. This is just a pretty good earnings report. But then let's look at what happened with the numbers that are reported on the big line, the big headline numbers. So you guys can see that they had, in quarter three, they were estimated to be losing 0.04 per share, and they lost 0.06 per share. So they missed by that 0.02. You can see that they beat revenue. Their revenue has been steadily increasing since 2020, I believe. Yeah, so they hit about 290 in quarter three of 2020, and they're at 480. That is a big increase in 2 years. That's a big move in 2 years for revenue. But their EPS missed. Let's talk about why. And it all comes down to this right here, guys. SPACs. They've invested and partnered and put a lot of faith in a lot of SPACs within the past 2 years. And that was a great move when SPACs were going nuts. That was a great move when SPACs were on their horse running like a motherfucker. But then you have companies like Fast Radius who just filed for bankruptcy. And you have companies, I'll just scroll through these and you guys can do your own research on them if you want to look at their charts and stuff. But I've done my own research on a lot of these. Some of them are up, some of them are down. But for the most part, Palantir is not doing well overall on these investments. Fast Radius filed for bankruptcy. That's a huge one. That's massive. And you can just look at the rest of these. Some of them are dragging Palantir down. They're making, Palantir go from this company who was cutting a profit for a while here, on these earnings reports. They were making money per share, and now they're losing money per share, and they're missing EPS. And I think that has a lot to do with those SPACs, and especially that one with the bankruptcy. I think that hurt them pretty bad in the financial department. But then let's go back and look. They have decent cash per share, and their debt profile is really good. So I think it's just a matter of a mistake from an investment perspective for PLTR there. And I think they could turn these earnings reports around. I really do. And here's the last thing I wanted to speak on here. Usually, a company's CEO talking about how bad the market is and saying things like, we'll wipe out some companies, would be an immediate red flag. But then again, we see Palantir's their connections with the U.S. government, and I don't think they have a chance, an absolute chance, not even close to a chance of being wiped out like they're speaking about here. You see him saying things like, deadly macroeconomic uncertainties will crush many companies with shaky fundamentals. And then he follows it up with bad times are incredibly good for Palantir. Bad times really uncover the durable companies, and tech is going through bad times. Interest rates are the reason. This deadly tidal wave will wipe out some companies, blah, 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 blah. If I saw that on, if Elon Musk said that when he was talking about Tesla, I would red flag, ding, 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 red flag is up. red flag is up. But for some reason, with the U.S. government contracts here, and their great debt profile, I'm feeling like that does not matter to Palantir. I think that they have a place in the future. This is the part where I get into my summary about how I feel if this is a buy and hold or if you need to wait it out. I think that Palantir has a place right now and the future, and it's growing very, very consistently. And I think, I would want to be finished scaling into this long by $5, I think, personally. I might save one ad for under $5, but I do think that this is a good long-term hold, and I do think it is a buy and hold. It's tough, though. This one is a bit tighter than the rest of my videos. The rest of my videos, I've had a clear feeling. This one, it's a feeling. I'm feeling bullish long-term, but I'm not as convicted on it, if you know what I mean. Like, I'm willing to say that this is a buy and hold because I believe in the company and the fact that they have so many connections and the fact that they're doing so well with their revenue and they're tightening their margins and doing better with their margins. They just made one mistake. It was one big slip up in investing in SPACs that really got them here. But I think this is a buy and hold going forward. So I think draw your levels out, whether it's $6, $5, $4, $3. If you think it's going low, that would put your average somewhere at 450. Or it's right now $6, $5.50, $5. And that would put your average somewhere $5.75. Make your decision. Comment below what you guys think on this video. I appreciate every single one of you guys for tuning into this. I love making these. I love doing fundamental analysis. So drop a comment what you guys think. If you're going long on Palantir, let me know. That sort of thing. We can chat it up about it. Thank you guys for tuning into this. Good luck with all this, and have a great week of trading. Peace out, guys.